Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, May 2nd, 5:35 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, large caps continue to be in an uptrend, although seeing a pullback today, though finishing well off the lows of the day. Regional bank fears return to the market today. Yesterday, we saw JP Morgan buy out First Republic, the latest quote unquote weak bank, but we saw another harsh sell off in KRE today, bounced somewhat late afternoon, but that area continues to be in a void. Along with commercial real estate, these banks not only have liquidity issues, they have a lot of commercial real estate on their books. And the issue with interest rates rising, they're on the wrong side of that, and it's kind of a catch-22. When you are trying to give yield to your deposit customers, 2 years ago you went to the long end of the yield curve to get the best return. Well, the inverted yield curve is turning that on its head, and that's at the root of the problem of this. Check over here at the trend gauge, neutral on leadership, deterioration on short term as mid caps and small caps both now below the 21 EMA. The large cap indexes remain above. Large cap indexes start giving up their moving averages. We're going to have a big problem. I'm going to show the Titan 25 in a bit, and that did show some deterioration since last week. But honestly, the FOMC tomorrow is what is going to. Well, actually, we've got three things over the next 3 days. We've got the FOMC at 2 o'clock, conference call or press conference at 2:30. Then after the close on Thursday, we have Apple earnings, and then before the open on Friday, we've got the monthly jobs report. So a lot of crosswinds coming into the market over the next 3 days. Medium term, also neutral, also with mid and small caps below their 50-day. Long term, also neutral, small and mid caps below their 200-day, as mid caps were caught up also in the bank fear part, whatever. I don't know if I can even count it anymore, right? When you think that it's like cockroaches, you squash one and another one comes crawling out from the baseboard. So on the day, RG7, our growth proxy, down 1.62%. S&P 500 gap down 0.2%, was down near, or 0.2, was down almost 2% at the lows of the day, but rebounded to close down 1.16%. NASDAQ 100 down 0.87. Dow down 1.08, mid caps down 1.4, Russell 2000 small caps down 2.1. Again, getting hit hard with regional banks. Global diversified 60/40 down 0.32. Global stocks down 1.1, global bonds up 0.9, as a lot of money flowed into bonds as part of a fear trade today on these regional banks being sold off. In-house GROTECTION, we were down 0.78%. Gold and our bonds did a nice job for us today. We also put on a pairs trade that I'll talk about in an effort to take advantage of this financial weakness. So let's get into the market. We start, of course, with the S&P 500. Our goal at Revere is to avoid massive losses. And we do this by taking a look at what the trend in the overall market is telling us. The trend's been extremely choppy this year. We haven't been able to take advantage of the upside to the degree that we've wanted to. Still cutting our losses small, but there's been more than we would have expected. Riding the trend on the indexes, we're positive there, but running into some headwinds. But it's the big 25, 30, 35, 40% losses. That's our ultimate goal of avoiding. Those happen below the 200-day moving average. We're still above the 200-day on the large cap sectors, and that's where our focus is. You can see here on the S&P 500, we pulled back, undercut the 21-day today, closed right above it, but we did break. This means the breakout to the new high here has failed. Let's go to a 60-minute chart here. Here's your breakout above this 41 50 to 4170 level closed above there yesterday. Here's the big bar today, down 1.2% during this hour. This was the big sell-off on, you can notice the volume down there, issues with the regional banks. And the more experts start talking about this, a lot of people are saying now, why would you even keep your money in a regional bank? They really can't pay you anywhere near what treasuries are offering you, and a lot of people are waking up to that, and the banks are counting on the ignorance of their clients not to take advantage of this, and it's not a good situation. We talked about it at length in-house today, and the reaction to the FOMC tomorrow is going to be critical. So S&P 500, you can see the bounce, the failure at 41.55. That was a key fib. That was something that we didn't want to do. We'll look at that when we get to the tail of the tape, but we did hold the 21-day EMA. Note that the 50-day and the 200-day, the 50-day is basically flat, maybe rising by a point a day. Same thing with the 200-day moving average, and we're 3.8% above the 200-day moving average. This two closes below, two closes above, this chop relative to that, that's been significant of a lot of the action on the indexes this year. Let's go to the NASDAQ 100, which has, of course, been showing strength last week. You can see the relative strength line there last week flagging out on there now. It didn't even touch the 21-day. Was a bit extended, but it did break below this 321.63 breakout level. Which you can see is basically right here now. Got above it is this 320 area, which is pretty clear here. Really, it's a range, maybe 320 to 321.50. Is that going to act as resistance on the way back up? That's something that we're keeping an eye on, because if it is, we may start seeing the leading stocks that have been holding up this market head lower. And then, of course, Apple after the close on Thursday will be critical. Dow Jones Industrial Average undercut, reclaimed the 21-day EMA. So for now, that's failed at the 34,000 level. Now let's get to the ugly indexes. Here's mid caps. You can see finished well off the low and undercut the lows of last week, but reclaimed it, but back below all three of the moving averages, and the slope of the stochastic has flipped back over and is heading lower. Same thing with IWM. Small caps made a lower low relative to last week, didn't make a lower low relative to 3 weeks ago, but back below the 821.50 and 200-day moving averages. I'll talk about our how we're looking at positioning ourselves to take advantage of uh, upside in the indexes, but downside in the financials, which it appears that the setup is right now, because here's XLF breaking back below, failing at the 50, breaking back below, and a rolling over 21-day moving average. The ideal situation, if you're trying to get short financials, is a waterfall similar to what we saw here, with it breaking back below, kind of similar to the setup here, broke below, uh, wedged back up into the 21. Here you see wedge back up above the 21 in the 50, and then negative reversal yesterday, follow through to the downside today. Stochastic rolling over here also. KRE much worse. There isn't an inverse ETF for regional banks. There's a long ETF, but you can see how hard we broke to the downside on these today, and I'll talk about that momentarily. So here's the VIX. The VIX spiked in the morning along with the indexes spiking lower, came quite a bit down lower, closed right on the 21 EMA. Again, this 20 area. This will be a big change in character, and we're watching for this if the VIX breaks above this 20 level and the downtrending 50-day moving average. There's the VIX. How about the dollar? The dollar today started out strong, sold off, headed lower most of the day. A couple of vicious spikes here with the dollar. There was some data that came out at 10 a.m. and then this 10:30 was the acceleration of the sell-off in the banks and people moving into bonds. Let's look at precious metals relative to the dollar, since they're so inversely coordinated, you can correlated. You can see UUP into the declining 50-day moving average, and it failed and reversed. It does have two closes above the 21, but that second close is very weak since you close at the bottom of the range. But just metals was the place to be today. Here's GLD. We undercut the 21 yesterday with vigor and volume back above it today. This is a really good setup. When you hang around the 21 while you get oversold and then you hook back up off of oversold at the same time you're bouncing off the 21, that's two tailwinds in your favor with an easy stop. Today's low should hold. We bought GDX yesterday to see it have a negative reversal. I talked about this in last night's video. We bought this gap up, negative reversal, closed at the lows of the day. Just the complete opposite of that today. Strength while the indexes were pulling back, and then a little cup forming into the close. So we regained yesterday's losses and then some, as GDX was up 4% on the day with big volume. Lot of good action in various gold miners. Obviously, silver. Same situation, up 2%, bounced off the 21, had the negative reversal yesterday. All three of them did. But again, it's got that nice setup with the stochastic and the bounce off of the 21 day. Let's go to bonds now. Broad, BND. It was ugly yesterday. Nice bounce today, very similar to the opposite of the gold trade, BND. Let's go to TLT. Ugly yesterday, but again, money flowing into this today. When money flows into it, that means the rates are going to go lower, which you can see they did. Here's the 10-year, backing off 3.78%, giving up yesterday's gains and then some. And then TYX, the 30-year, down 2.3%, not giving back as much as the 30-year. Bitcoin, banking crisis, money flowing into Bitcoin. We saw it again today, bouncing off the 50-day moving average, up 3.5%. So let's go to the tail of the tape here now. Still on the bull case, need to hold the 21 on these moving averages. 10 a.m. job openings below expectation, so fewer job openings than were expected. That's something that the Fed wants to see. They're concerned about wage inflation. And then, of course, heavy selling in the regional banks that kicked in. Day count from up to with the consolidation to down one day. First day below the 80 MA on the S&P, fourth day above the 21 on the S&P. We dropped slightly, from 92 to 87% chance of a 25-point basis hike tomorrow. But we were at like a 30% for the following, and that's down near zero for the following Fed meeting. Put the high in, open equals high, OEH. When you put the high in within the first 5 minutes, it's not a good sign for the market. We trended down for 2 hours, then the reversal, and trended higher before basing into the close. Didn't, of course, regain all of the losses, but closing only down a little bit more than closing down 1.16% was actually a mild win, as well as the undercut and reclaim of that key 21 EMA on the S&P 500. 10 out of 11 sectors down, only XLY was up, and that's basically all Amazon, and Amazon was green today. That's why that was up. Bond prices and gold stocks, precious metal stocks, the big winners on the day. To the downside, regional banks, real estate. Changes to the portfolio. We sold SSO on the break of the 21. Down about 1.1% on that. Trimmed our ON, that most recent buy when we broke back below 32. We bought Uber on its big gap up. Here's the pairs trade: Berkshire Hathaway long, short FAZ Financials. I'll talk about that when I show the charts, and we added a little bit to NVIDIA on the pullback. Bottom line, regional bank fears return. FOMC Wednesday at 2 p.m. The reaction will be to the statement will be key. So let's take a look at a few charts, and then we're going to look at the Titan 25. We're going to start out here with Uber. Very strong. I want to show a tale of two gaps up today. Here's Uber, 400% above average volume, up 11.55%. They're going to show a profit this year and next year, accelerating. Uh, just a good report. Let's look at a 5-minute chart on this. So it gapped up, went sideways, and then started to just trend higher. And this is while the market was selling off. Uber was trending higher. Uh, Look on the other hand at Sprouts, another stock that gapped up, how it sold off along with the market selling off and closing near the lows of the range for the day. That says, at least today, massive difference in institutional demand for Uber versus Sprouts. Now, um, travel stocks actually have been doing well. Airbnb's making a comeback. Uh, some of the higher end retailers are acting fine. Restaurants acting fine. CMG uh, holding its gap up. Wing reports earnings tomorrow. That looks really good. That's on the 2121 list. So kind of a mixed bag here on what we're seeing with the individual names. And then FAZ, that's a triple short financials. XLF, you can see, as I mentioned, the break of the 50 and the failure at the 50 and the 21. Now, XLF, there's kind of a strange setup with this. The largest holding in this is not a financial stock. I mean, arguably it's a financial stock, but it's an insurance. But uh, Berkshire Hathaway, which we've been watching for a while as it's been showing relative strength after it came off of this cup, this is 12.2% of the XLF. So what we're doing is taking advantage of the one of the stocks that's holding up extremely well in XLF and letting the financials and the banks that are in there uh, go lower. So it's kind of a way to take advantage of XLF and still take advantage of the best looking stock in there. Um, so this should hold the 21 Berkshire Hathaway and XLF should continue to fail at the 21. So those are the two stops that we're looking at on that trade. So I showed Uber, ON, the break below 32. We trimmed our most recent ad, still holding above the 21, but it's given up the 80 MA for now. And let's see, that's about it. A couple other names I showed SFM. So Celsius continues to act well. This was up nicely yesterday, was down almost 6% at one time, recovered most of it to close right below the Livermore level inside day on Celsius. DraftKings, another new leader, former leader, making a comeback. Held up pretty well today, inside day, still holding the 80 MA. I showed Chipotle, I showed Wing. After hours, AMD selling off pretty hard. It's down 6.5% after trying to regain the 21 and the 50-day moving average. They beat, but I believe they slowed a bit on their forward guidance, so that'll hit semiconductors tomorrow. Let's see. Okay, the Titan 25 now. Let's take a look at this. So if the big cap names that dominate the S&P, the Nasdaq 100, and the Dow don't break down, the indexes won't break down. So this is a relative strength indicator for each of the last 4 weeks. Basically, it's a stoplight. Green is good, yellow slowing, red bad. And here is, we're watching these relative to their 21 and their 50-day moving average with 4 different colors. If it's and here's the color scheme down here, but what we've seen this week is an increase from 9 to 13, 7, 8, 9, 13. You can see the count here trending lower. So it's getting a little bit weaker or worse. Now the winners, or what's trending up, still looking good. 9, 12, 9, 9, that's staying pretty steady. The dark green means it's trending above their 1.5% above the 21 or 3% above the 50-day. On the downside, it's 1% below the 21 or 2% below the 50-day. That's what yellow is. And then the red is 2% below the 21 or 4% below the 50-day. So getting a little bit worse relative to the 21 happens a lot. If stocks bounce at the 50-day, everything's fine. Right now, we've got three of them more than 4% below their 50-day, one of them more than 2% below. And as I said, decreasing relative strength on 13 of the 25. Now, the market what had been on a nice run. It's normal to have a pullback, but we don't want to see a bunch of them, everything starting to break the 21 and then failing at the 50-day moving average. Watching these 25 will give us a heads up to the overall direction of the indexes, or it will point to the relative strength or weakness inside of the different sectors should they start breaking down. So that's your Titan 25 update on Tuesday. And with that, I'm going to wrap it. As always, love to hear from you. Email is don@revereasset.com. Phone is 855 Real Wealth. That's 855 732 5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Market at a crucial state here. What's the Fed going to say? What's the reaction going to be? Are we going to see continued issues with banking liquidity? That's really was the focus today for this morning anyway. We'll see what what cards come out of the deck tomorrow. So with that, I'm going to wrap up Tuesday, May 2nd. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.